it was always taxable, but it was not trackable. So if you have not reported this income in the last 4 years, 5 years, you have underreported your income. But let me not go into that domain. That's a different area, that what will happen if it gets reported in the earlier, if it's not been reported in the earlier years. But this is a tracking provision, not a taxing provision. Now, Vishal, could you move to the next slide? I will just touch upon the basic tenets of this section because I don't want to go too much into the technicalities. The section is very simple to understand, but complex to apply. So I will go into the complexities subsequently. Yes, Section 194R introduced under the Finance Act 2022, applicable from 1st July 2022. Why not applicable from 1st April 2022? Well, the provision says that if the value is more than 20,000 in a financial year, but then does a financial year start from 1st July 2022? No, financial year starts from 1st April. We have some case studies which will explain, clear the air on this issue. The nature of payment. So it has got to be a benefit or a perquisite. So there is a payer who's giving a benefit or a perquisite to a person who's resident in India. Now, please be mindful of the word benefit or perquisite. It is not provision of a cash. It's not provision of a monetary benefit. It is a benefit or a perquisite. Whether convertible into money or not. And Vishal and I will discuss more in detail that what is the meaning of this whether convertible into money or not. Because this phrase, and this is an extract from the circular and extract from the act, this actually clears the air to a large extent, actually, that monetary benefit. And I don't want to jump into this, but it's a subsequent interpretation which will come in the subsequent slides. So nature of payment has to be a benefit or perquisite. It's got to be a payer. The payer should have at least business income more than 10 million, or it should be in a profession more than 5 million. The payee should be a resident of India. The tax rate is 10%. And when do you deduct? When you're providing. So the language of the law is before providing the benefit or the perquisite. That means at the juncture when you're providing the benefit or passing on the benefit of perquisite to the recipient or to the payee, at that juncture, the TDS should have been deducted. Not after, not before, but just at that juncture. So before means at that juncture, the test will be done. You're providing the benefit. Have you deducted a TDS or not? Effective date 1st July. There's a lot of confusion around it. I thought it's better to be covered under an example. Threshold limit is that if I'm providing a benefit to a particular payee, of which the value of which is less than 20,000 through the year, then I don't need to deduct it. So if I have 5 payees, there are 5 people who are getting benefits from me, of which 3 of them are above 20,000 in through the year, and 2 of them are not. For those 2, I will not deduct. Again, to reiterate, I spoke about what was spoken in the budget speech. It's also important to see what has been mentioned in the memorandum. So it says, as per the memorandum, the objective to introduce Section 194R is to widen and deepen the tax base. As in many cases, the recipient do not report the receipt of benefits, which is taxable under 28(4). Interestingly, as we move into the circular and we move into the provisions, it comes out that you as a deductor or as a payer, you are not to be concerned whether it is taxable under which section, under which provision, at what rate in the hands of the beneficiary. So if you're giving someone a benefit, it is taxable in his hands or not is not the important. Only test as a deductor which you have to do is that it is a benefit or a perquisite being passed on to that individual or to that payee. Moving to the next slide, Vishal. Now, the section was in place in the month of February. We all knew about it. It was passed by the parliament. But obviously, with a section of this kind which is there, it was also mentioned in the 194R2 and 194R3 also, that the CBDT will issue guidelines for removing any difficulty, knowing that it's a new and a little different kind of a provision. So they will issue circulars or guidelines how to implement this. But this is a very interesting kind of a introduction, because generally the circulars which are issued under Section 119 of the Income Tax Act, where it is binding only on the income tax authorities. And when I say income tax authorities, that means the assessing officer and the commissioner. But this is an introduction of circular under Section 194 R2 and in R3, where it is saying that this is going to be binding not only on the revenue, that is the income tax authorities, that is the commissioner and the assessing officer, but also on the person providing any benefit, that is the payer. Something unique of sorts, something which you generally don't see, because I remember since my last 20 years of being in the profession, there are many circulars I have always argued that this circular is not binding on me and my reading of the section is different. Therefore, this circular is not binding on me as a taxpayer and I'll challenge this, and it is not binding. You as a revenue officer want to follow it. It is your prerogative. Please follow it. But I am not going to follow it because I feel it is not meeting the objective of the section. But here it's a different kind of an introduction, not the conventional Section 119 of the Income Tax Act. Now, if again, there are certain other things that if the PAN and all those details have not been provided, then there'll be a higher value of TDS. With all of this, still there was no clarity in how this would be implemented. On June 16th, government came up with this circular, which is under Section 194 R2 and R3 of the Act. That means it is binding on the revenue and binding on the taxpayer also, or tax deductor also, but binding on me, wherever I'm going to deduct it. Now, moving to that particular, so Vishal, can you move to the next slide? Before I jump into the circular, and I'll request Vishal to very briefly, within the 3 to 4 minutes, touch upon the 10 points or the 10 questions, because I would like to spend more time on the case studies. And believe me, these case studies are something which we have received as queries from our clients. These are real life scenarios. The most important definition which comes up is benefit or perquisite. What is benefit or perquisite? So if I go by the definition as per case laws under the Income Tax Act, if I go by Black Laws Dictionary, a benefit is an advantage or a privilege. A perquisite is an obligation of one person by another person. But it is not coming from, so the benefit definition is not coming from the Act. Reason being, perquisite has been defined under the Income Tax Act, but not benefit. Rather, perquisite is defined for salaries under Section 17 of the Act. So there's still some queue for the definition of perquisite, but there's no queue for the definition of benefit. So one relies on the case laws and whatever is provided in the dictionary. But as both of them have been used together, they've been coupled together in one phrase, one can say they're interchangeable to each other. Rather, they combine together and form a single definition. An advantage, a privilege, an obligation of one person paid by the other. So all of that will fall in the ambit of benefit or perquisite. One interesting point which will come subsequently is, which we'll discuss when my friend Vishal will discuss the circular. Does a monetary benefit come under the definition of benefit and perquisite, or a monetary gain? So this is something which is a very critical point, and that unlocks the answer for many of the questions and the situations which arise in the day-to-day business. Vishal, could you help me just touch upon those 10 questions, at least broadly the 10 questions which have been spoken about in the circular?
Sure, Aditya. See, interestingly, what CBDT has tried to cover here is they have covered life scenarios which people were facing, and also they have tried to answer the issues around threshold and the responsibility as to how, because in this section, if you would one note, they have stated that the provider has to ensure payment. So they've also captured as to how he would ensure. So I will just briefly touch upon each of those 10 pointers. See, first point is with respect to taxability. So there was a hue and cry as to whether if the amount is not taxable in my hands, or if it is not taxable under 28(4), which was used in the memorandum to the budget speech. So whether this provision of 194R would trigger or not. So the government has clarified by way of these guidelines that irrespective whether that amount is taxable in your hands or under which section it is taxable, if it is a benefit or perquisite to the recipient, then you have to deduct 194R. One interesting point to observe here is, unlike other provisions, 194R is not covered within the ambit of 197, which is a lower withholding tax certificate. So even if you have a losses, even if the recipient has a losses, he cannot take advantage of 197 lower withholding tax certificate. And that will create a cash flow issue to him because he will have to claim a refund if arising to him in the return of income. Second is with respect to benefit or perquisite.
Vishal, I will just, Vishal.
Yes, sir.
It is that because this is not covered under 197, so the benefit which is available under many of the sections that if I'm in losses, or if I am having very lower profits, I can go for a lower withholding tax or a nil withholding tax also. That benefit is not available. That's a very, very, very interesting element actually. Because in the hands of the recipient, he's having losses, but he'll have a TDS created out here.
Yes, it's actually then 10% is a huge amount that will be stuck for him at the year end.
True.
Yes.
Please continue, please.
Yes. So moving on to the next one, which is benefit or perquisite may be in kind or in cash. See, I'll take 2 minutes here to discuss this because it's very critical to understand. See, I will also touch upon the relevant extracts of the Act and the circular and even the proviso to cover this. See, in the guidelines, the CBDT has clearly stated that the benefit could be in cash or in kind. It not necessarily be in kind. However, when one looks at the Income Tax Act, so I will just bring the Income Tax Act for the benefit of larger audience. See, one would note that the first provision, the first section 194(1), which is the main charging section, it deals with any person responsible for providing to a resident any benefit or perquisite, whether convertible into money or not. So I'll take a pause here, whether convertible into money or not. So the intent was always to cover only the cases which are in kind, not money or monetary items. Otherwise, they would not have only stated whether convertible into money or not. The item which can only be covered here is kind. Now, one would say that, when you read the proviso, first proviso, it says that it could be wholly in kind or partly in cash and partly in kind. But such part in cash is not sufficient. And they have mentioned that TDS has to be on the whole, including the cash component. But there is a good argument to say that provisions or the provisos cannot expand the ambit of the main section. So the main section only restricts itself to benefit in kind. It does not extend beyond that. So a proviso can only be included or provided for smooth implementation of the main section, but not for the extension of the main section. Now, this circular has gone beyond that. There was still an ambiguity whether cash is covered or not. The circular has outrightly or clearly stated that it is covered. See, the circular, though it cannot stand in the same footing as other circulars of CBDT, which are issued under 119. However, this circular cannot override or cannot go beyond or cannot expand the scope of the main provision. So the scope of the main provision is, if restricted to kind, the circular cannot go on to expand the scope of the main provision. So a very good argument is to say that only the benefits in kind are to be covered and not necessarily the benefits in cash.
Vishal, so very interestingly, your primary section starts with kind. Your proviso expands it to partly in cash, partly in kind. And your circular goes on to say completely in cash.
Yes.
So from the section to the proviso, there is an expansion of the provision. from the proviso to the circular, there is a further expansion in the definition. But if I go only restrict myself only to the section, then it is something only in kind. So something which is in cash, or rather something which is partly in cash and partly in kind, these two should not be covered within the ambit. Right, Vishal?
Yes, Aditya.
But even though if I, for a moment, I take your argument and say partly in cash and partly in kind is provided in the act itself, which has been passed by the parliament, and it is part of the Income Tax Act, and we have to honor that. For a moment, I know there are enough rulings to say that the proviso cannot expand than what is intended in the section. But for a moment, if I assume it to be, but the circular goes to that level of saying in cash. That I think so is an extreme way of looking at things, and I don't think so that should stand around. Nevertheless, let's quickly run through this because we have many questions.
Sure. And third, the third query, the FAQ deals with benefit which may be in nature of revenue or capital. So there was a thought that a capital receipt should not be covered, or a capital asset should be out of the ambit of this 194R. But the guidelines have cleared the air to say that the capital asset, the nature of benefit or receipt, even if it's in the nature of capital asset, it would still be a benefit or a perquisite. So the fourth is, see, interestingly, even the CBDT, they have excluded sales discount, cash discount, and rebate out of the purview of 194R, but they have still stated that even these are of the nature of benefit or perquisite. But since these are all accounted for in both the parties' books and will create a hardship for the payer, so we are excluding this. So they have gone beyond an extent to say this, that these are also benefits. Or
Vishal, I think so. There would be a reason. Obviously, the income tax department was tempted to make this taxable also, or rather not taxable, I'm sorry. Put this in the ambit of 194R. It is always taxable. It's still taxable today. But I think so they were restricted by the GST provision, because the GST provisions have a similar exclusion on these three: sales discount, cash discount, and rebate not covered. So probably sense prevailed, and there was an objective to align the GST and the income tax provision. That's why this has been kept outside the ambit. Vishal, I would just like to summarize your 1, 2, 3. Because many of my clients were coming up and saying it may not be taxable in his hands, it may be a capital receipt, it is a capital asset. The provision is very clear. The person who's receiving the benefit, at what rate it is taxable, how it is taxable, under what head it is taxable, and at what rate it is taxable, and whether it is taxable or not, that is not your concern. You are a deductor. You have passed on a benefit or a perquisite. The moment it is a benefit or a perquisite passed on to him, you have an obligation to deduct. Assume it is a capital receipt in his hands, he will go and take a refund for it. Assume it is not taxable under some particular head and taxable under some other head, it is for him to decide. For me, the moment I'm providing a benefit or a perquisite, I deduct. That is the provision. And that's explicitly provided, and I think so it's a logical conclusion as well. Otherwise, this lower withholding and everything would come up. So someone would say, I have losses, I have carry forward losses, I'm never going to be, there's no going to be any taxability, lower withholding, nil withholding, what rate, which head. That is not your concern. You pass on a perquisite or a benefit, deduct. Moving to the fifth point, please, Vishal.
Yes. So in the fifth point, Aditya, they have, for the larger audience, they have provided the valuation mechanism as to how this benefit or perquisite would be computed or calculated in the hands of the recipient. So they have started with saying that the valuation shall always be fair market value for in the hands of the recipient, except in two situations. So the two situations are, first is a case wherein the provider purchases this benefit or perquisite from the market and gives it to the recipient. Second is, if he is a manufacturer of that same benefit or perquisite, so the valuation would be the price that he charges to his customers. So that's how they have provided the valuation. Interestingly, for the audience, see, though they have stated that it will be the fair market value for except these two cases, but they have not defined the fair market value here. So it will also lead to issues in future. People would tend to adopt the fair market value as per various taking various arguments. So this will also lead to a dispute. This certainly has opened doors for further issues. So now sixth is with respect to social media influencer. The government also understands and recognizes the ways of doing business, the new age digital businesses, as to how, uh, it's not only us. I understand the government is also moving forward with us, and they understand that people now are taking help of social media influencers to uptrend their products. So they have stated that whenever you use a social media influencer, and if you give a product to him for influencing or for market expansion or promotion, so if the product is kept by him after usage or after that in post, Instagram post or whatever, then that will be a benefit. If that product is returned to the company, then it will not be a benefit to the influencer. Now, in the seventh point, they have covered the reimbursement, how benefit or perquisite would arise in the case of reimbursement of out-of-pocket expenses. In my personal view, government has gone way beyond. In query 7, what they have stated is, see, I'll take an example here. They have stated that if you appoint if a distributor spends some amount on behalf of the company, and if the bill is in the name of the distributor and he claims a reimbursement of that, then that will be a benefit for the distributor. However, if the bill is in the name of the company itself and the distributor pays it upfront initially and then claims it as a refund as a reimbursement from the company, then it will not be a benefit. So here, see, there will be a huge problems here as to how would you ensure that each and every payment, the bill is in the name of the company. Further, in many cases, the OP was many times people used to bill it as a part of the main expense. So the companies were anyways deducting the relevant provisions of the Act like 194J or Q as the case may be. So only in cases where there was a separate invoice for OP and on which TDS was not deducted, that will now come within the ambit of this seventh FAQ, where the bill was initially in the name of the middle party, the distributor. Now, eighth, dealer conference. This is.
I think so. Yes. We will cover this in a case study.
Okay.
So let's skip it because this is like opening a Pandora's box. So yes, we will cover it in a case study.
Sure, I think. So ninth is with respect to responsibility of payer to ensure payment of tax. See, this is unlike other provisions of the Act. This provision triggers when the company provides a benefit. It is not on payment or credit, whichever is earlier, or not on availment or utilization. It's on when the benefit is crystallized or provided to the recipient. So they have provided a mechanism as to how the recipient can ensure. So see, in many cases, the benefit can only be in kind. It may not be in cash, or the part in cash may not be sufficient to meet the TDS obligation. So they have provided two scenarios as to where, the company can take a advance tax challan from the recipient, and basis that advance tax challan and the declaration from the recipient that the 10% liability has been paid to the government, the provider can release the benefit to the recipient. Second would be the company can bear that cost of 194 out of its own pocket, and in that case, it will have to gross up that benefit, which will again become a part of the benefit to the recipient. So they have provided these couple of ways or these means to ensure that payment or the TDS is discharged on the such payments. Now, the third FAQ deals with computation of threshold. See,
we covered it in the case study again.
Perfect. Sure, I think. So I'll jump to the case studies now, and I now hand it over to Aditya just to bring some or throw some light on these case studies for us.
I think so, Vishal. You bring it on. So I will say, bring it on. Let's take up those 15 odd case studies which you have built. So you explain and we'll deliberate on the answers.
Perfect, idea. See, as we have left, we left that 10th FAQ, which was dealing with threshold. So the government has stated that if the benefit provided during the year is more than 20,000 rupees, then the payer has to insure TDS at the rate of 10%. So there was an ambiguity, or there was an ambiguity, or there is still an ambiguity among many as to how this 20,000 would be computed, and whether this 20,000 is an exemption, so that this 194R would trigger only on an amount exceeding 20,000. So I will take this up with two case studies. See, first is, say, if you have provided benefit, say, of 15,000 rupees till 30th June, and post 30th June, if you provide a benefit of 18,000 rupees, so the query, there are a couple of queries. First is whether this TDS would trigger on this entire 33,000, or it would trigger only on that 30,000, or it would trigger on that 18,000, as the cumulative value is exceeding 20,000 and the benefit post 1st July is 18,000. So the answer here is that the TDS should be deducted on the benefit of 18,000, which is provided post 1st July. Now, a second case study. Say if till 30th of June, I have provided benefit of 1,50,000 instead of 15,000, and post 1st July, I provide a benefit of 18,000 rupees only. So whether the TDS would be deducted on 168 or on 18 or on what? So the answer is TDS would be deducted only on 18. Since it exceeds 20,000 and on the benefit provided till 30th June, there will not be any TDS. So since it has already been provided till 30th June, only on the amount which is provided post 1st July, since the benefit prior to 30th June already exceeded 20, so on the entire value of 18, there will be TDS at the rate of 10%. So I hope this clears the air around as to how this threshold of 20,000 would be computed. So I think, can I move to the next slide?
Yes, I thought you were supposed to ask me this question. You answered, you asked the question, you gave the answer. Thank you. Let's move to the next slide.
Okay. So moving on to the next slide. See, there could be scenarios where, or there was still an iota of doubt in many cases as to if I am contractually obliged to give you a benefit, if I have contractually agreed to provide certain benefit to you, that if you achieve this amount of target, or if you achieve this, then I will provide you this benefit. So whether that would be also be covered within the ambit of 194R. So see, just to clear the air around this, benefit in any form, benefit or perquisite in any form, whether contractual or not contractual, would be covered within the ambit of 194R. So I think I'm keeping your take for the issues which are very much complicated and which will open the Pandora boxes. So this I have answered by myself. So I'll just move to the next one. So see, as we discussed while discussing the FAQ, the government though believes that sales discount, cash discount, or rebate are part of benefit, but they have excluded them. So a query arises that in many situations, this discount may not be given immediately. It may be given after sale, or there are cases where credit notes are given, say for rate differences, for defective goods, or for annual turnover, in the nature of annual turnover discount. So the issue arises whether these incentives or these credit notes or discounts, which are not provided immediately but are linked with the invoices or with the period, would fall within the ambit of 194R. So here you have to understand this. See, what they have stated is that if you provide something not linking or not linked to your sales, which does not go to reduce your sales, and which also not reflected in the purchase cost of the buyer, that's a benefit. But if something if a discount or a credit note, if it goes on to reduce the sale of the buyer, of the seller, and purchases of the buyer, that will partake the character of rebate allowed to the customer from the listed retail price merely because it is provided after sales or after a particular period that does not alter the character of these discounts. These discounts are nothing but lesser realization of the sales price and partakes the character of rebate, which is much wider than sales discount and cash discount. So, any thoughts on this, Aditya?
No, Vishal, you can move to the next slide.
Yes. So, moving on to the next one. So, this creates a huge issues within the industry, has created already, as to what happens when you select 10 of your distributors basis their annual turnover or target achievement, and you give them or you take them for only education with the objective of education or training. So in the circular, if one would note, they have allowed for dealer conferences only for 6 objects, which is new products being launched, discussion as to how the products are better than the others, for obtaining orders, teaching sales techniques, addressing queries, reconciliation of accounts. And they have also stated in the same breath that such conferences must not be. So you have to just note this, or you have to just understand this. They have stated that these conferences must not be in the nature of incentive or benefit, must not be in the nature of incentive or benefit to select distributors basis their target. So a question arises as to when the company identifies 10 people out of 100 basis their annual achievement of target or basis their performance, whether these, and they take them on, take only those 10 for education or training purposes, which fall within the ambit of those 6 broad headings provided by the CBDT, whether that will come within the ambit of 194R or not. So here, see, Aditya, you there? Okay, so nevertheless, I'll just touch upon this as to what if you identify only those 10 basis their achievement, targets, fulfillment, and then you take them for this, whether those, if you provide them this benefit, whether for those 10 people, whether this will qualify as a benefit of perquisite or not. See, since the para that they've used along with this 6 exclusion, they have stated that this conference should not be or must not be in the nature of benefit or incentive to select dealers. So if it is a benefit or incentive to select dealers, then it will fall. But if it still falls within the ambit of these 6 broad categories which the CBDT has provided, it should not fall within the ambit of 194R. If the company only rationalizes its cost of training programs by shortlisting people basis their performances or target achievement, should not be classified or should not fall within the ambit of benefit of perquisite for the purposes of 194R. However, one should note that if there is any leisure component which is included in that training program, that has to be proportioned, and to that extent that will be a benefit. Now a question arises whether pre and post stay would fall within the ambit of this 194R or not. So Aditya, your take on this as to whether this pre and post and the overall thoughts on this business dealer conferences.
Well, Vishal, I think so. If I look at this select, they've come up with this word select, but I think so they've gone overboard somewhere. I think so the CBDT has gone overboard in stating that if I'm identifying a set of distributors or dealers just because they are good performers, or I want to spend more time with them because they're generating more sale. If I'm restricting this to a smaller crowd, it does not mean that I'm passing on the benefit. Rather, if I start reading the circular in the form of a provision, the way it has been, and I will just read it out for everybody's help. Such conference must not be in the nature of incentives, benefits to select dealers, customers who have achieved particular targets. So the word incentive benefits precedes the word dealer customers, select dealer customers. So if I read it like a provision, obviously a circular is not a provision, not a section that I need to interpret it. But if I try to interpret it, the word incentive benefit is preceding the word select dealer and customer. But again, if I look at that phrase in the circular, it says such conference, such conference. So it creates an element of confusion, but I think so sense would prevail. Obviously, it's a very natural phenomenon in a business that you select a particular set of dealers who are the better performers, who can generate more sales, and you will want to spend more time training them. You will not spend time who's generating 1% of your sales, someone who's generating 10% or 5% or reasonable percentage of your sales. You will want to spend more time with him, training him, educating him, showcasing your new products. So I think so we should not read too much into that. Again, on this particular thing of foreign trip or any even an India trip, or I think this is nothing to do with a foreign trip. It's to do with any trip or anywhere you are taking them. The moment the element of leisure comes in, to the extent of that leisure which is there, that leisure element is a subjective thing, definitely, but it has to be quantified, and that has will fall in the ambit of 194R. One good thing is that question number 8 of the circular is clarified that if you're taking people anywhere, you're training them, and that was the primary objective for educating someone of a new product launch, discussion on how the product is better than the others, obtaining orders from dealer customers, teaching sales techniques, addressing queries, reconciliation of accounts with dealer customers. So if it's something within this ambit and something similar to this, it will not be within that ambit. Now, leisure, the circular was so smart enough to, Vishal, interestingly clarify this point that if the training is on 3 days, and one day before and one day after will be considered as leisure. But I think so that doesn't happen. Practically, you generally let people come in and settle down one day before, and after they have completed, you, depending on the timing of the flights they are flying, you may give them one more day. So I think so that rationale and explanation, if it can be built, let's not read too much into the circle of one day before and one day after. But if you read this in practicality, the leisure element has to be segregated and has to be shown as a benefit or purpose. So yes, this is something I think so. My reading of the whole thing, people are getting too perturbed about it, but I think so. You need to be cautious about it. You need to have your documentation of expenses done, your hygiene of maintaining those expenses, documenting it with the bills and everything has to be done a lot better out here. What do you say, Vishal?
I agree, Aditya, that one has to necessarily maintain all those checks and balances while incurring those expenditure, so as to ensure that they unnecessarily don't fall within the trap of this 194R.
Yeah. Let's move to the next case study.
Sure.
So this one is an interesting one. I think so. This will be there in everybody's mind. Yes, please, Vishal.
Yes. See, we all know that while it's a normal business practice that companies do incur expenditure on certain low value, low nominal items like pen, diary, then your calendar, your chair, AC, filter, pen drives. So all those things on which company's brand or logo are imbibed, and which is more in the nature of creating a market for the companies who are incurring those expenses. So a question or a query has been raised by many of the companies as to when we incur this expenditure, whether that will also fall within the ambit of 194R. So yes, I think.
Very interesting. So let's look at an example, Vishal. I would answer this question in a manner where assume a manufacturer is giving its dealer some watches, or some clocks, which will be put in different showrooms, sub dealers, and it's just a simple clock. Obviously, the benefit is that you are getting to see time in it. But I think so. The value which is coming out of that clock is, it's something that you cannot quantify. Means it's, the benefit is more actually to the manufacturer, the brand owner, rather than to the dealer. But obviously, if I'm giving you a H&M or a very premium brand watch, then it's the value which is being, because I think so the answer to this lies more in the value of the product. So if I'm giving you a diary, a calendar, a pen, say a 10 rupees pen, 20 rupees pen to be distributed, which has got a logo XYZ brand, there's no value out of that. But if I'm giving you a Parker pen or a very premium branded pen as a brand reminder, but it's something very premium, but say a 20,000 rupees pen, and which may have a XYZ brand. Even with that XYZ brand, that pen has its value. So I think so. It's a very fact-based exercise. You cannot just conclude. But yes, off the cuff, I can tell you something like a calendar, pen, diaries, all these which are distributed, which is got the logo embossed. That is definitely not coming in the ambit of this. So I think so here the answer can be found more through the value of the product. That what is the value of the product? Because if the value is scrap, then there's no benefit of purchase which I passed on to him. But if the value is there with the logo also, so assume we have always seen that caps are given, right? Caps are distributed. So now, if it is a premium Louis Vuitton cap with a logo being embossed, there's still a value to it. But if I'm giving him just normal, good quality caps with a logo of XYZ, no one is going to buy that in the market. No one is going to pay $1 for it. Also, no one is going to pay a dime for it. What is your take on this, Vishal?
I agree with you. I totally agree with you, Aditya. I'll just take it a little more further with respect to valuation. As to when we say it's more of a fact-driven exercise. Like, for example, if I give you a T-shirt, like many big companies give T-shirts for marathons, many companies give caps for these marathon runs just to create more branding for them, more recall value for them, but not to give a benefit to the runners. Like in that case, a very good argument that it's not a benefit would be to say that the valuation per se would fail. The valuation that they have provided would fail. As to why, I'll tell you. See, they have provided valuation basis three mechanics. First is fair market value. Second is, except two cases where first is if you purchase and the purchase value will be the benefit for the recipient. See, if I purchase with my brand imbibed in something, and if I want to sell it, there will not be any buyer for it. The value, in fact, in case of a customized product, low value product, decreases or falls with that brand embodied in it. So, and further purchases would categories which will fall under purchase would be something of a commodity which is available off the shelf, not something which I purchases only for myself and not for the others. If nobody can buy it from the market, then it's not a product or a commodity which is tradable, and hence this should not fall within the first limb of valuation. Second would be manufacturing. If I am a manufacturer and if I give it to, and the price at which I give it to a seller would be the benefit. See, if I am a manufacturer, my brand embodied product are not sellable. There are no customers. There would be no buyers. So again, the second limb also fail. Now the only limb which is left is fair market value. See, as you rightly mentioned or pointed out, it's all fact driven. For a product like T-shirt, calendar, wall,
yes, there's a question from a attendee. I think so. If you answer this question, you will have explained this point. The question is brand and logo reflected on silver coins. How do you cover it in this section?
See, I would say brand like silver coins would fall within the ambit of 194R. I'll tell you why. See, you can carry your diary or calendar or pen anywhere you go, but you will not carry a silver with a brand embedded in there, like, see, I've got this from X company, this brand, this is this brand. You will not carry wearing it in your chain just to promote that brand. It is more, you have to understand from a personal consumable perspective whether and what is the value of it attached to it. You would not want that silver coin or gold coin that anybody can, it's a marketable product, whereas this diaries, pens, these are not marketable. So it's very fact based exercise which one will have to carry out.
So the answer is yes as well as no. And that will be depending upon the usage of the product, nature of usage, the residual value, or if you go to resell it immediately, what is the value once the logo has been embossed. So if once the logo has been embossed, no one is going to buy it or no one is going to trade into it. Like, there's a very good t-shirt, but if a XYZ brand has been embossed, there's no value of it in the market, even though it might be a polo shirt. But polo shirt with the XYZ brand, why will anyone go and buy it in the market? No one will buy it in the market. So then it'll have a very residual limited value. Then it doesn't fall in the definition of benefit or purpose. But yes, if you give someone a simple polo shirt without the brand, definitely the benefit and the purpose it is there. Now, if you give someone a very premium watch or a pen which is worth 20,000 with a logo embossed, for that 20,000, the value may not be 20,000, but there'll still be a 15,000 value out of that for that pen. So it's a very fact-driven exercise. So answer is yes and no to this question. We can move to the next slide.
Sure, Aditya. So next is with respect to channel support. See, we observe in our daily experience that there are cases where a company, say, I'll just take an example, say McDonald's or KFC or whatsoever, that a franchisee partner takes a retail space and he takes a franchisee right from XYZ company or ABC company, and this ABC company like McD or KFC, they ensure that the decor or the feel of that place is something which they get in any of their stores. So they make sure that the store, if anybody goes there, they take the feel of the same feel that they have in any other store. To extend this further, there are cases where we see that this Pepsi Thumbs Up gives refrigerator to their retail agents or to their retail outlets, so that the products does not get damaged, or they are in a good state. So a question arises whether these kind of products, which or these kind of channel support which these companies provide to their extended arms, whether this will fall within the ambit of 194R.
So Vishal, a simplest example would be that if you look at a Coke or a Pepsi, they give a fridge for the products to be housed in that particular fridge, and those fridges all over, they have a Coke or a Pepsi respective brands embossed on it. That's a great branding thing. But they are also deriving some benefit. Is it a benefit? I don't know. That is a question. Or if a particular McDonald's or any of them are helping them create a branded store which looks alike any other McDonald's store across India, with the same look and feel, and with the same kind of brands being similar look and feel and experience and all of that. Well, I don't know. It's a little debatable thing, but I know we have taken a view that if this is something which is returnable, which is or on a closure of a franchisee agreement, I will take it back from you, or on closure of your dealership agreement, I will take it back from you. But it does create a little bit of doubt in my mind, because all said and done, he would have done that expenditure himself also. But yes, if it is something on a returnable basis, there is good merit in saying that there is no benefit. This is something which has been done for my own benefit only, for promoting my own business only, and there's no benefit being passed on to him. If there's any benefit, it is incidental, but one has to be very careful. Again, Vishal, answer maybe that it will not fall in the ambit of 194R. But again, there's a chances of this getting abused. So one has to be very careful to what it is, because it should not be that I've done this whole store, I'm literally done everything about the store, and he didn't have to do any furniture. So that is definitely a benefit which is arising to him. But if it is something to linked with the branding, something to linked with the uniformity, something to about the look and feel of that brand, then I agree. I definitely agree. So a little debatable area, but yes, I'll say tilted more towards a non-applicability of 194R. What do you say, Vishal?
Yes, Aditya, as you rightly put it, that we have to understand that if the products or if this supports are returnable in a reasonable time frame, then one can definitely say that these are not benefits which have been passed on to those distributors or retail partners. It's in fact a benefit which has been taken by the companies by providing those things. But as we have discussed this, as you have already captured this, that if it is not returnable, if that distributor or has a right to keep it even after your distribution arrangement gets over, then there is a gray area. And I would say that considering that these are tedious provisions and the onerous consequences, so one should take a conservative view, and that should be a benefit. But how will you compute the fair market value will be a bigger question.
So Vishal, I'll give you an example. Like there's a Tata showroom. So Tata Motors has given one car for demo purposes, and it is on paper, it is on returnable basis, right? I've given it to my dealer. Here is the car. You do it on demo basis. He uses it for all the demo purposes, everything and all of that. But we all know at the end of 3 years, when that product would have been lapsed and the next model would have been coming, he will sell it off at scrap value to the dealer. It is a known fact. These are instances which create a little bit of a concern, because it may be on paper returnable basis, but it is actually never returned. It is sold at scrap value. So knowing that it will never be returned. So, that returnable basis in the contract, and again, you use the right word, Vishal, reasonable basis, reasonable period of time. So if in the whole cycle of the period till the time that product was a vital product in the market, it is being retained by the dealer only. Questions do arise? Yeah, please.
Yes. So, Aditya, in many cases we observe that if you take a service from one company or from one provider, or say if you buy something from the seller, then at times as a consideration you pass on a consideration in form of kind. Like, for example, if I take a service from a lawyer and I give if I give one flat to this lawyer in consideration of that, so what's your take on whether 194R would kick in these kind of cases?
So let's take an example. You gave me 50,000 rupees of raw material, right? And in return, I gave you a finished good, which is value of 70,000. Right? Now, what happens in this kind of a case? And I'm telling you, this is something real life I've seen. So in lieu of raw material, someone has given finished products as a consideration. So it's sort of a barter actually, which is happening. Now, 50, 70, there is a delta of 20. Yes, there is a benefit, but one should be careful that out of that 70, 50 is falling under the normal sale of goods. The 20, which is over and above the 50, that is 70 minus 50, that will fall into 194R, not the full 70 falling into 194R. That is my take. What is your take on this?
I agree with you, Aditya. Then, in fact, there is one circular of CBDT, Circular 720 of 1995, which provides that TDS would be only under one section to the exclusion of other sections. So as you rightly put in that, if the value of service or goods that I have bought is 50,000 rupees, on that one will have to evaluate whether 194Q would kick in, or if it's a service 194J would kick in, or if it's a commission 194H or C, as the case may be. So the purpose of the transition would determine, or the service or the good would determine whether what would be the respective TDS provision. However, where there is a benefit included in it, then there is a question as to how would you differentiate between the other provisions and 194R. So in that case, on the value of the service or good, the relevant provision, as the case may be, 194Q, C, H, J should apply, and on the benefit part, 194 would kick in. But then again, this would lead to a hardship for the payers, as to they will have to, on one invoice, how can there be two TDS provisions? All those queries would come in.
Oh, the best comes after this, Vishal. The GST implication. So there is a transaction, 50,000 given, 70,000. Till now, it was 50-50, even though it was not coming to light. But now what was not coming to light will come to surface, because your 194R goes into your 26. From there, it will get reported. There has to be a reconciliation. It's a bigger Pandora's box which opens up under GST actually. Rather, I think so in example number 3 also, there were a lot of issues which would have arisen under GST. Not only in this example, in the example number 3 also which we took. So I think so this is a very common practice which happens. You're given a flat, but I've seen raw material and finished goods happening, and it was not getting captured in the GST, but now in the GST it will get captured and it will create a different kind of because there is a reconciliation which will be required.
Yes.
You can move to the next example.
Sure. So moving on to the next one. So this deals with, see, this is a general business phenomenon that there are situations where there are either offer of loans or settlement of loans at a lower value, and there are bad debts, which is a normal practice in every industry. Like there are bad debts in almost each and every industry. Who does not have this situation in their company? Like either they have to write off the bad because it's not recoverable, or they have to settle, or it's a cost of doing business. In many cases, it might be disputed. The debt might be disputed, and you'll have to let it go. So this broad case of waiver or settlement and bad debt written off, how do you see Aditya would fall within the ambit of 194R?
Vishal, with waiver of settlement of loan, I don't know why are you bringing this. This, I know it is coming because of this notorious circular. Otherwise, it should not have been there in your slide. You know, your circulars. So our CBDT has been smart enough to quietly put in this thing that waiver and settlement of loans is also like a business income. It's a benefit, and it's also mentioned a ruling in this regard. Right, but somehow we wise consultants know that the ruling which they mentioned, by virtue of which it states that waiver or settlement of a loan is a benefit, has been overruled, and there are umpteen case laws after that actually a waiver or settlement of a loan is not a benefit under section 28(4). So I think so. This is a confusion which is being created by this circular. Second, I think so, which we discuss, and you discuss very well, that the proviso expands the section and your circular further tries to expand the proviso. But the moment we say the word benefit or perquisite, it is something which is non-monetary in nature. Whether convertible into money or not, that is fine, but not a monetary benefit. And a waiver on settlement of a loan falls in the ambit of monetary benefit. So you have two arguments very strongly. First being that this is not a this is a monetary benefit. Therefore, it is not a perquisite benefit and out of the ambit. The second argument which you have is that there are umpteen case laws, including Mahindra and many more case laws, which will take it out of the benefit clause of benefit, and therefore it should not be seen as a benefit or a perquisite. So that is for waiver or settlement of loan. Now coming to bad debts, again, the first argument being that this is a monetary benefit, but that's a more legal argument. If I take a little more, debatable, something which is a logical argument, if I want to take, I'll say that a bad debt is a unilateral act. It's not providing a benefit. It is sort of a compulsion because of an abusive act of the other party. The man is not paying me. He's harming me. He's hurting me. And my accounting standards are pushing me that he's harming you by not paying you. And therefore, to reflect a true and fair view, you are going to go for a bad debt. Your auditor is pushing you for it. It is not a voluntary act of mine. I think so. Benefit or perquisite is something which I am happy about, something I want to give you something. It's a benefit, not a compulsion where I am compelled by the standards and compelled by banks that this is not, money is not going to come back. reflect your financial statements, your shareholders, your stakeholders saying, get a true reflection of a financial statement, therefore write it off. We know this money is not coming back. That other person is not responding, he's not giving you. So I think so this doesn't come into that. It's there. So two arguments, as I said, monetary benefit, and it's a unilateral act, act under compulsion and not something which is voluntary. What do you feel, Vishal?
Just to add, Aditya, yes. See, I totally agree with what you have said, with just one exception, that this both of these cases should not fall within the ambit of benefit of perquisite. However, see, for the case of settlement, if the borrower is in the money lending business, then there would be a difficult position to say that it's not a benefit for him because it is arising to him in the course of his business. Now for bad debt, see, for bad debt, it's a unilateral act, then it's fine. However, it should not be a abuse of this act. Like there could be cases where debt is in favor of a related party, and that related party is in losses. So you know that even if that loss, if that party does not pay, even if it has to offer it, there will not be any liability in its books. But for you, you will create a loss in your books. So you are abusing the provisions of bad debt. So in such cases, even factually, one will have to see that there should not be an abuse of or collusive arrangement to take advantage of this bad debt written off. So I agree with all the arguments that we have taken, with a caution that one should be mindful as to if one is into money lending business, then settlement of waiver might fall. And if the bad debts are written off as an arrangement to take advantage of loss, then this might get eyes off.
Vishal, you're trying to cover those related party arrangements where you're trying to take benefit out of this by, I think so that overall will fall within GAR also. So, but obviously GAR has a 3 crore limit and all of that.
Yes.
But yes, I'm with you. We can move to the next situation, please.
Sure, I think. So the next situation deals with provision. See, provision for benefit incentive payable. See, it's a normal business phenomenon, or it's as per the requirement of the accounting standards also, that every company books a provision for the benefits or the incentive that it might pay in future. So they have to record an expense that they force it to incur. So a question arises that if I have already made a provision in my books of say 31st March 2022, however, the benefits are being provided post 1st July or after 1st April, as the case may be. So whether 194R would trigger in that situation wherein the provision is already standing for those expenses in my books as on 31st March. So your views on this, Aditya?
So Vishal, the way I look at it, there are 3 points, the way you very nicely explained in your graph also. So in that linear graph, 1 point is the provision in the books. The second point is providing the benefit. And the third point is consumption or availing the benefit. So the whole section is talking about providing the benefit, not the consumption of the benefit. So if assume, let me give you a small example. On 31st March, I have provided for air tickets or a benefit to one of my dealers on 31st March. I provided for in my books, but I buy the tickets on 25th of July and give him the tickets. But the travel is happening in the month of December. So the first point was provision the books 31st March. Say sometime in July is providing the benefit because I handed over the ticket to him. And the consumption of the benefit or availing the benefit is in December. What is important is the providing the benefit. That is the month of July. When I handed over the tickets, the amount, the benefit, everything has been crystallized. I've handed over the tickets to him. The provision clause has been fulfilled. Although the consumption has not happened, but it doesn't matter. The consumption may happen in December. So, and again, as we had read in the section, it has to be provided before the benefit. So around July, when you're handing over the tickets, in that particular month, the TDS has to be deducted.
Perfect, Aditya. So I'll move to the next one, Aditya. Given that
this is reimbursement of corporate benefits, move to the next one.
Yes.
Can you move to the straight away? This is very important. Or can you move to the next one?
We can move. I'll just sum it up in just one
Please,
line. See,
please.
in many situations, at times the employees incur certain expenditure. Like, for example, an employee might incur expenditure towards gifting to a distributor, and then he might claim it as a reimbursement from the company. So a question arises whether in that situation the liability is on the company to deduct 194R. So the answer is yes. The responsibility or the obligation was always of the company to provide such benefit. It is just through employees it has been routed. So that will not take away the issue of 194R. Even if it is a reimbursement, 194R will have to be deducted by the company in the hands of the recipient. So I'll move to the next one.
Yes.
So group insurance premium. See,
very important.
In many situations, yes, we observe that the company do take insurance policies to cover its risk or risk of the contractors of its contractor. Say, for example, if a company is into construction industry and it employs or deploys various contractors, so to protect itself or the contractors from any undue health exigencies, they take this group insurance for those people and for might it for itself. So in this situation, how do you see that 194R would trigger in the hands of the recipient? So there could be two situations, I think, just to again clarify for the audience. See, in one situation, the company might take insurance for itself to protect itself from the cost that it might have to incur for the health expenses of the contractors. The second situation could be the company might take insurance policy for the health benefits or for the health expenses directly for the contractors. It is not in between. So your take on these two cases, Aitya?
Vishal, I'll take the case 2, which is more easier. Yes, it is a benefit. Definitely it is a benefit, but it is a benefit to the company itself. It is a benefit to myself. So there is no question of 194R. The more easier answer. Second, yes, it is a benefit to the people who are being insured. And that is where you will have to apply a proportionate formula and derive a value for the 194R. So yes, case 1 has to be studied more in scrutiny. The answer is yes, 194R applies. There could be situations where one has to understand what is a larger long-term arrangement or agreement between the company and the beneficiary. But at the face of it, 194R applies in case 1 and 194R definitely does not apply in case 2. But again, 194R, I will not give it a blanket. The one situations, facts, the contractual obligations needs to be studied between the company and the parties which are insured. So that contractual arrangement has to be seen to have a conclusive answer. On the face of it, yes, 194R applies.
Got it. So I'll just move to the next one.
We can skip this one. We can skip this one. This is more to be doing with clubs and associations. Yes. This is an important one. You should cover this one.
So recommendation of company's product. See, in various situations, like say, for example, I'll just take an example. So in case of say plywood industry or in FMCG space or various spaces, they get businesses from interior decorators, from architects, from carpenters. So these carpenters or interior designers or decorators might recommend your product to the end consumer. So when they recommend this product, so after the buyer buys this product from the distributor, the company as a general practice gives a certain amount or a certain points to these architects or distributor, which can for these carpenters, which can later on be redeemed by them for a benefit. So a query arises whether this payments would fall within the ambit of 194R, or whether this is a benefit to the carpenters or for this interior or architect, or whether this is a service payment and would fall within 194H. So what's a better view as according to Aditya?
So Vishal, the way I look at it, definitely a transaction is there. The transaction is there. Now, question is whether it's a benefit or whether it's a service which is being given. See, in the absence of, let me put it this way, in the absence of 194R, would you have deducted a 194H or not? And the answer would be yes.
Yes.
So, And as you mentioned in your circular number 720 of 1995, you cannot apply two TDS provision. You'll apply one of them. So in the absence of 194R, you were always applying 194H. So I think so we'll go with 194H, but obviously the contractual arrangement has to be seen. Because many a times what has happened that as a conservative people were doing 194H, even though 194H was not there in some cases. So then one may slowly migrate into 194R because many parties were doing that because eventually if you have to deduct a TDS. But what's the difference in rate between H and R? It's 2 and 10?
So it would be 5 and 10, Aditya. It's 5%.
Oh, 5 and 10. So it's a double whammy, double impact. I know, but one needs to scrutinize what would apply, whether it's but I think so. This is something which is more of a consideration which is given. I don't know, I think so. One should evaluate it a little more in detail because I've seen many cases H did not apply, but parties did apply H also. Moving to the next one, Vishal.
So
this is very important. This is a common trade practice.
Yes, I think so. This is a very general business practice that companies generally do tend to provide equipment, which could be in either form tools, machinery, molds to their job worker to carry out their work more efficiently. And they, in either of the situation, they might charge for it, rent for it, or they may provide it for free. So there could be two scenarios that it's a dedicated job worker. He is only supplying or he's doing only service for me. And there could be a scenario where that my machinery can be used for a third party also, for doing job work for the third party also. So a query arises whether this free equipments which are provided to job workers in these two situations would fall within the ambit of 194R.
Well, Vishal, I think so. I'll go for the case 2 first, because it's more when the equipment can be used for third-party services. So when it is used for third-party services, it is actually a benefit being given. So I am giving him, say for example, I am giving him a fridge to keep my range of products, and half the fridge is filled with my products. And I'm permitting him to, in that fridge, he can keep half of other branded products as well. So he's using that fridge for other brands, keeping other brands. So it's like a common fridge for him. So it's actually, he would have otherwise gone and bought a fridge. So if that some sort of a bifurcation can be done, what is for myself and what is for the use of third parties, to the extent of third parties is clearly a benefit. And what is exclusively for me, well, he's my contract manufacturer. He's my job worker. He's doing it for me. Where's the benefit arising? It's just a tool which I've given him to service me only. So I look at it this way. I am not sure whether case 2 happens more rampantly, but case 1 is the more known phenomenon. Does case 2 happen also?
Yes, I think there are certain practices where both of these cases do take place.
But more, I think so. Case 1 is the more common phenomenon, right?
Yes. So I'll move to the next one, I think
we'll go to 16 straight away because there are 20 odd questions, of which 10 look some very interesting, and we have another 10 to 15 minutes to cover this.
Sure. So the last one which we have kept for this session is payment for damages or compensation. See, it's a normal practice that there could be wear and tear while delivering that product. There could be a breach of contract for which I'm paying certain amount to the distributor. So there could be many more situations wherein I am compensating the recipient, or I am just recouping the cost or the damages that has been incurred while delivering the product to him. So a query arises: this cost or this compensation cost, does this partake the character of benefit for the purposes of 194R?
This is a lot more larger question actually. So first of all, I have a counter question for you. Any compensation which is received by a party, which is option 1, a decree of the court, option 2, not a decree of the court, how is it taxable in the hands of the recipient?
So I think as a degree of quote. So if you get any amount by way of a degree of quote, then it's not a taxable event. It's a capital receipt in the hands of the recipient. However, it's not a degree of quote. Then it's very facts-based exercise. Like as we discussed, if it's a compensation to recoup the damages, then it's not a benefit or not an income. Whereas if there's an income element, then certainly it's an income. So degree of quote not taxable. The other element one has to carefully see whether there is an embedded income element or not.
Okay. So Vishal, you answered my question whether it is taxable in the hands of the recipient under degree of quote and not degree of quote, right? But now we all discussed this at the start. We don't need to look at the nature of taxability in the hands of the recipient, right? So interestingly, both the answers are correct, but we don't need to look into that, right, Vishal?
Yes, I feel.
Yes. But what we need to look at it is whether it is a benefit or a perquisite.
Yes, certainly.
And the answer is no, it is not a benefit or a perquisite, it is a compensation. So the moment I can put this in the basket of a compensation or a damage as a compensation for the damage or something of that sort, and it is not a benefit or a perquisite, whether it is under a degree of the court or not a degree of the court, it doesn't matter, isn't it? That is, Vishal, what happens is that we generally go into how it is taxed in the other party's hands. But somehow our 194R works in a manner, whether taxable, whether not taxable. So interestingly, Vishal, if the officer is able to convince that it is a benefit, now it is in the hands of the recipient, whether taxable or not taxable, whether degree or not degree will not matter. Isn't it, Vishal?
Yes,
so
I
think so we have to look at it from my side, whether I'm giving him a benefit or not. And as you very rightly put it in your slide, it is not a benefit, it is a compensation. And the word compensation is very much different from a benefit or a compensation. Right? So Vishal, you have been asking many questions. Now it's my turn to ask you questions. So our audience has put up some questions. I'll start with the first one. Value of hotel expenses, food expenses, staying expenses for selective dealer conference should also be considered for TDS calculation. So we covered it, but I would want you to answer it again.
Sure, Aitya. See there, first we'll have to see whether this dealer conference is in the nature of the prime objective of the dealer conference is only educating or training their dealers. If yes, then the entire dealer conference, even for select participants, is not a benefit. Now, the related expenditure, if the main transaction per se is not taxable, then or not TDSable, then the related expenditure, whether it's in respect to hotel or staying or fooding, would not fall within the ambit of 194R.
Thank you. Thank you. Great answer. I don't have to add anything to this. So the word was more, emphasis was selective. His concern was more on selective. The next question is giving free samples for testing and trial to customer to be considered as benefit?
So Aditya, here, see, it's a very interesting question. See, when you say free sample, so sample, they have covered this by way of an example. So I'll just touch upon that and we'll also discuss the other aspect to this. So they have covered in their FAQ that if you give 2 products free along with your 10 products, and so accordingly the seller reflects it in a way that he has sold 12 items for a value of 10. And the buyer in turn also recorded as that he has bought 12 items for a price of 10. Then to that extent, free samples are not covered within 194R. However, say for example, if you just generally give free samples and those free samples can be sold by a distributor to create a value for himself, then it's a benefit to him. But if it's something which is not sellable and it has no market, see, if I'll take an example. You have given a raw product for a distributor to test at customer premise. And after that trial, that product has no value or it diminishes. There's no sellable value. And it's a product which is not for sale. It's only for testing at the market, at the customer's place. then there's no market to it. It's not a sellable product. Then one can certainly that those free sample which are not for sale and has no value and would it's a one-time transaction, then there is no benefit involved in it. However, as I said, if you give a product which so as a normal practice, what you want to create a market for it, what you do is you give 5 samples to your distributor that you try a market for this. If there's a market, you can give me orders, purchase orders. So he sells those products in the market and derives the benefit out of those sales of those 5 products, but not passes on that benefit to you. You are not selling it to him, you are giving it for free. Then it's a benefit. So it's a fact-driven exercise. One has to see, carefully analyze as to why and how you are giving that free sample to your distributor or consumer.
Very good. See, Vishal, I will say that we have to now, at least for 194R, you have to keep imbibing this in my mind, because every time, we used to think it is, so we have to come out of the ambit of section 37. It is my business promotion expenditure. It is my business promotion expenditure. That is not the question out here in 194R. Question of 194R is whether am I giving him a benefit. If a free sample is something where I'm giving it to him, he's studying it and giving me a feedback, there's no benefit to him. Rather, he's giving me a service actually of giving me a feedback on my product. But
I'll add, Aditya, I'll just add here. Yes. See, in case of authors and book publishers, what happens is if an author is publishing his book through a publisher, so in many scenarios, this publisher gives certain copies to the author. So now one would stretch it to say that these free copies would also part in the benefit, character benefit. See, the author derives value as a royalty only on the products which are on the only books which are sold by the publisher. He is not deriving any royalty from the free books that he is getting. These free books that the author gets is used by him only to market his book. He uses it to market his book, not to sell in the market. He only gets royalty only on the number of books that is being sold by the distributor. So I'm just connecting the dots here for the larger audience. That one has to carefully analyze and see what is the benefit is a very fact-driven exercise.
Vishal, interestingly, someone has picked up a Tata Motors example in the conversation today. And the question is, in the example of Tata Motors, which we discussed, on the sale of the test product to consumer, there is a TCS recovery. Whether this transaction will still be subject to tax in the hands of the dealer.
See, in the example of one on sale of test products,
to the consumer,
there is a TCS recovery. So, in effect,
I think so. The question should have, I'm a little confused out here, because in the example of Tata Motors, on the sale of test product to the dealer, there's a TCS recovery. So when there's a sale to the dealer, then the TCS recovery is done, then this will not come. But obviously, if I'm giving it to the dealer at a price lower than what it should have been, then there's a benefit which is coming. But if there's a subsequent sale to that, then that benefit is getting captured. So I think so. The question is not coming out very clearly out here. I'll give this a skip. Here is a question. Hotel voucher and air tickets given to dealers on 29th June. But the actual conference is on 4th July. Whether 194R is applicable. The question is regards the date only on which the date of benefit is passed on to the dealer. So I think so. If you see, the provision is triggered from effectively when you're looking at the value, it is triggered from 1st. Now, this was given before 30th of June. So, and if the value is less than 20,000, on this value, there will not be a TDS, right, Vishal?
Yes, I think. Because as you have already covered this, that on 4th of July, he is availing.
But tickets were given on 29 June.
Yes, provided provision on of the benefit June. Was only on 29 June, on which date this TDS was not triggered.
Now here is another question. We are auctioneers and rules require samples of tea to be forwarded to the buyer. Who do an evaluation decide to participate in the auctions? Now, in this case, okay, what's your take, Vishal? Then I will give my answer on this. So this is like tea auctions, You send sample of teas, and if they like the blend of the tea, then they come over. for an auction process. So here the question is that, rather, I'll say the answer will go in a manner that whether there's a benefit being provided to him. If I'm giving him a sample and that sample is cannot be resold in the market, or it's so small in size. Say you're sent 20 grams and they look at the 20 grams or 30 grams and or 40 grams, and which you're not going to obviously sell it in the market. So definitely there's no benefit you have passed on to him. Vishal, your take on this?
I agree with you, Aditya. So one will have to factually see as to what nature of sample you are sending it to him, and quantity would matter. See, everything would not necessarily fall within the ambit of 194 hours. One will have to see whether there is a benefit or a perquisite in the hands of recipient or not. So if there is no benefit which is in the hands of the recipient, then there should not be a question of 194 hours.
Yeah. So there is a question: manufacturer selling to distributor and then distributor selling it to retailer. The discount which is passed on from distributor to retailer is reimbursed by the manufacturer. Does this qualify as discount rebate specifically exempted from 194R or covered by FAQ 7? Business liability of distributor being met by manufacturer.
So in effect, Aditya, what I understand from this query is, see, if I have sold a product of 100 rupees to you at 80, you being a distributor, and you eventually, instead of selling it at 85, you have to end up selling it at 75, even at a further discount. So this additional 5% discount which you have offered to your retail partner, you recoup that discount from your company.
No, I don't think so. It says manufacturing selling to distributor and distributor selling to retailer. The discount which is passed on from distributor to retailer, which is passed on from distributor, is reimbursed by manufacturer. So how does the manufacturer reimburse this?
So it
by
would
way
be
of a separate.
Yes, credit note. So it would be for the rate. See, as we discussed, rebate is a wider term. Then sales discount and cash discount. So it is more like a rate difference that you are passing on to the distributor, because he had to eventually sell it at a lower price to the retailer. It might be for a commercial or a business reason. So if that is passed on by way of a rebate to the distributor, then should not fall within the ambit of 194R and should be covered by this meaning
Vishal,
of rebate.
One more thing we have to be mindful out here is there is an alignment definitely which is done for discounts and rebates in income tax and GST, the terminology. But again, from a GST perspective, somewhere there is a little bit of a prerequisite sort of a thing that it should have been pre-agreed, and all of those elements have to be seen. So alignment is there to the extent of 90%, but that 10% of alignment between the GST and income tax on rebates and discounts is still missing. That alignment has to be careful. You have to be careful on this. But yes, apparently it seems there should not be an applicable of 194R, but obviously one has to look into the facts the way you do it. It should be done through a commercial invoice. If you do it through a GST invoice, all the more better. If you do it through a commercial invoice, but cover a particular period, a set of invoices, tag it to that, okay, it is this particular period, just not an ad hoc number. Anything which is ad hoc in nature will not get. You will fall in the ambit of 194R.
Yes, agreed. Yes.
Will testers qualify as free samples? Okay. I see whoever has put up this question, I will have to understand your industry to understand what is the objective of testers. So again, I'm telling you, look at it again this way, come out of your mindset of business promotion expenditure. Come to the point that whether it is a benefit to him. If it is not a benefit to him and a benefit to you, if it is a benefit to him and a benefit to you also, but a reasonable good benefit to him, it is under 194R. A benefit to yourself does not disqualify or get him out of 194R. A non-benefit to him gets him out of 194R. There may be a situation, it's a benefit to both of you. So we have to understand in your context, okay, testers meaning is written means trial packs like lipstick. Okay. So if there are trial packs which are being used and feedback is being received and there's no commercial benefit being derived by my dealer, then definitely it's out of the ambit of 194R. So if I give someone testers, he tests it, he gets feedback from the market, and he doesn't sell it, the impact doesn't come into his P&L account, he doesn't make money out of it, where is the benefit? He's actually helping you out in the business. The benefit is to yourself and not a benefit to you. Again, I reiterate, a benefit to me and a benefit to him, 194R applies. A benefit to me and not a benefit to him, 194R does not apply. Then what would be the consideration to doctors for recommendation of branded medicine? Vishal?
So, interestingly, Aditya, so if we have to see whether these doctors whether they are employees of a particular, why I'm saying this is, the question is what would be consideration to doctors for recommendation of branded medicine? So if I don't think anybody gives any extra amount to a doctor just to refer a particular medicine. You go to a doctor, he prescribes you a certain medicine, you may buy it, you may buy the substitute of those medicines. But the doctor generally gets benefit from the pharma companies to recommend their products. So the benefit or the consideration that they get from the pharma companies to recommend their medicine to you would certainly partake the character of benefit.
Vishal, very interesting question. Free samples for replacement of damaged goods sold to a party. It's very difficult to give a blanket answer, but I would like to hear from you. Free samples for replacement of damaged goods rejected, which are sold to the party. So again, I'll give you a hint. There is a contractual. You have to look at the contract. Yes, please go.
I agree. And generally in a normal business practice, if you replace a good, it's not a free sample. You replace that or you replace that rejected product. It's like it can be either form. It can be a goods returned to you. The damaged products are returned to you and you replace those returned products, or you recoup the damages which has been caused to the buyer. So if that be the case, if it's a damages which is being recouped, or if it's a finished product in place of those damaged goods, then it does not partake the character of benefit. For free sample to qualify as a benefit, one has to evaluate whether there is essentially a benefit to the recipient. If I have got two products, if one of the product is damaged and it is in warranty, or if even if it's in warranty, if I am a distributor or a manufacturer, my contractual obligation is obliged to replace that product to me. There is no benefit which has been passed on to me. It's a contractual obligation to replace the damaged product. It's a normal business practice that does not qualify as a benefit to the recipient, in my view.
No, I think so. I concur with you. Vishal, when we started looking at the questions, there were 20. And as we started answering the questions, the number is now rising to 39. And it will touch 40. I think so we can keep on going through the evening. But we have crossed the time limit by 10 minutes. With this, there are many more questions. I'm sorry I'm not able to answer all of them. You can reach out to us. We will help you with most of these. Many of these are practical. We are facing this with our clients on a daily basis. My initial reaction looking at these questions is, Vishal, that in many of these cases, 194R actually doesn't apply. Somewhere there's a little bit of a fear factor which has got created because of this provision. But if you do a practical application, a very logical application of the provision, in many of the cases, actually, they should not apply. Yes, please do expect little bit of aggression from the revenue where they will say, we'll try to apply in 194R. But if you keep your documentation right, there is good sound reasoning where 194R would not apply. And I think so most of the questions, Vishal, interesting I was looking at, they were debit notes, credit notes, rebates, discounts. I think so if the element of documentation and the mannerism, the invoice is taken care well, 194R would not apply. But obviously, I don't want to give a blanket clearance to this, but that's my reading. Well, I would want your final comments on this whole provision also, Vishal. What is your advice to the clients? What kind of hygiene they should maintain now that we are already on what is the date today? 8th of July.
Yes.
And we are 8 days into living this provision.
So I think you have very rightly concluded or summed up, I would say, the essence of this provision. And you have also clearly rightly highlighted that there is a fear among the industry which this provision has created. I would say the fear has has been created more because of the circular which was issued. So people were expecting answers, and the circular has created more queries for the industry players. See, one would just need to look back their policies, just one need to look back their papers, documentation, what they have to maintain. They have to ensure that it is aligned to the normal business practice. If see, as Aditya initially pointed out, the government has just tried to plug the provision which the plug the loophole which was there, that it was always a benefit. If something was always a benefit, it remains a benefit. But if something which was not a benefit, and you foresee that there might be retaliation from the revenue, from the exchequer, from the government authorities, you have to just be better prepared for it. You have to ensure that your documentation are aligned with the essence of your trade, your practices. You ensure that your documentation speak for itself. If these are not benefits, essentially they don't have the element of benefits, you just need to be better prepared. You just need to better ensure that your better hygiene checks are and balances are maintained. It's a timing issue which we have to just pass through this. It's and we have been used to this now. Every year we see these TDS provisions which are being introduced by the government. Every year, last year it was 194Q. Prior to that, there was this TCS 261H. So the industry are now used to this administrative hurdles which the government is being created. But yes, nevertheless, the industry people have just now need to be more mindful as to when they carry out their practices. The hygiene and the balances, I would again reiterate, just ensure their documentation are correct.
Thank you, Vishal. I would want to re-invite Angana Sharmani for a closing statement.
Yeah, but Angana is not well, actually. I have told you also earlier. So she has logged off, means she's not well, maybe doing some tests for the COVID, you can understand. So pre-COVID symptoms all there. So she's not well. So that's why she has logged off. Thank you, Aditya. Thank you, Vishal, for your deliberations, and thank you for the nice deliberations. I think the delegates are very helpful. Have received the insight thoughts of 194R, which has been recently introduced and is applicable from 1st of July. So thank you once again for organizing the session along with the Bengal Chamber of Commerce. Thank you.
Thank you. Thank you.
Thank you, sir.
Thank you, Vishal.
Thank you, everyone. Thanks for joining.
Thank you.